Is Broadcom's massive $73 billion AI backlog a sign of unstoppable momentum, or are storm clouds gathering in its newly acquired software business? While some analysts are calling the company a must-own AI stock, others are pointing to a shrinking iceberg. So, which is it? We'll dig into the numbers and the news to find out. Welcome to TickerWatch News for Broadcom, Week 8, 2026. This is the weekly podcast that brings you this week's news and developments for Broadcom. We'll be breaking down the key headlines and what they could mean for the company moving forward. Stock Snapshot. Broadcom stock experienced some volatility this week, trading in a range between approximately $340 and $325. For the week, the stock saw a modest decline, closing out the period near $333 per share. This continues a recent trend that has seen the stock pull back over the past month. Looking at the broader market, it was a mixed and somewhat pressured environment for tech. Both the S&P 500 and the Nasdaq registered declines for the week, with the tech sector facing headwinds from investor concerns about AI disruption and high valuations. Top news and headlines. The biggest headline for Broadcom continues to be its deep involvement in the artificial intelligence build-out. The company reported a record $73 billion AI-related backlog, driven by its custom accelerators and networking products. Hyperscalers, including Google and Anthropic, are reportedly increasing their orders. This has attracted institutional investors, with reports showing that both ARK Invest and Soros Fund Management have recently purchased shares. In new product news, Broadcom announced what it calls the industry's first digital front-end system-on-a-chip for 6G wireless infrastructure. The new chip, named Broadpeak, is built on a 5-nanometer process and is designed to deliver significant power savings for next-generation 5G advanced and 6G massive MIMO radios. The company says the chip is already shipping to early access customers. The company also officially launched its Wi-Fi 8 platform for enterprise networks. The solution is designed for AI-ready networks, combining access points and switches to handle data-heavy, low-latency applications at the network edge. However, it wasn't all positive news. Reports this week highlighted growing challenges in Broadcom's infrastructure software segment following its acquisition of VMware. One report from CloudBolt Software suggests that 86% of companies are now actively trying to reduce their use of VMware. Another story noted that IT provider Nexus Tech is launching a competing service, citing customer concerns over Broadcom's new licensing model and significant cost increases for VMware renewals. Market reaction and investor sentiment. Wall Street analysts appeared divided on what to make of Broadcom's story. The overall sentiment remains bullish, but some caution is creeping in. On the bull side, firms like Mizuho, Goldman Sachs, and Jefferies have reiterated positive ratings, pointing to the company's powerful position in AI accelerators and networking. Price targets from these firms range from the low $400s up to $500. Wolfe Research also upgraded the stock, citing the powerful demand for Google's custom chips, which Broadcom helps build. On the other hand, D.A. Davidson initiated coverage with a neutral rating and a $335 price target. The firm expressed concern that Broadcom's AI business doesn't justify a premium valuation, warning that its largest customers could eventually design more of their own chips in-house. Citi also trimmed its price target slightly, citing investor concerns around gross margins. Technical and fundamental check-in. From a technical perspective, one report noted that Broadcom's stock price recently tested its 200-day moving average, where buyers appeared to step in, suggesting the long-term uptrend is still intact despite recent weakness. Fundamentally, valuation is a key topic of discussion. With a trailing price-to-earnings ratio reported to be in the high 60s, many analysts note the stock isn't cheap. A discounted cash flow analysis from Simply Watt's Life suggested the stock may be overvalued by about 11%. However, others point to the company's strong growth prospects, including a forecast for AI revenue to double year-over-year in the first quarter as justification for its current price. The company continues to return capital to shareholders, having increased its dividend by over 10% late last year. What to watch next week?
Looking ahead, the most significant event on the horizon for Broadcom is its next earnings report, scheduled for March 4th. This will give investors a much clearer picture of how the AI backlog is converting to revenue and provide an update on the integration of VMware. Before that, the entire semiconductor sector will be watching for NVIDIA's earnings report on February 25th, which often serves as a barometer for AI-related demand. The bull case for Broadcom hinges on continued, massive spending from cloud providers on AI infrastructure and a smooth integration of its software assets. The bear case centers on customer pushback against VMware pricing and the potential for long-term margin pressure if competition in the custom chip space heats up. That's all for this episode of TickerWatch. Thank you for listening. This podcast is for educational and informational purposes only and does not constitute financial advice. Please consult with a financial professional before making any investment decisions. We encourage you to subscribe, leave a review, and share this episode. We'll be back next week with another update.